Good morning, everybody. February 21st, AM Path Chat covering commodities and futures indexes. This is Bob Iacchino from Path Trading Partners, along with Mike Arnold, as always. Mike is going to show you some price action in the crude oil chart, the Russell chart, the Nasdaq chart, the S&P chart, and the Dow chart, all applicable futures that you can trade. I want to touch on the crude oil really quick before I give it over to Mike. It's a very interesting breakout in crude oil when you consider a lot of the data, short of the OPEC comments, really leans bearish, yet we're breaking out ever so slightly, well, I guess it's dramatically, above the sideways channel that we've had for a while. You had active oil and gas rigs in the United States, according to Baker Hughes, increase Friday by 10. 6 of them were oil rigs, 4 of them were gas rigs. Money managers now hold the highest volume of net longs of Brent and WTI on record. That is the highest ever. And the gasoline glut is now the worst in 27 years. It's at 259 million barrels now. Gasoline storage levels are now at their highest level since the EIA began tracking the data in 1990. So that's essentially the highest level ever. And it takes over 2 barrels of oil to make 1 barrel of gasoline. So big gasoline gluts means a slowdown potentially in demand for crude oil. Now you might say, well, the summer driving season is coming up, and that's true. The summer driving season is coming up. But when you get overruns, production overruns, which is really where the gasoline glut is coming from. Gasoline winter demand didn't actually drop that much. Production actually ramped up at the refineries. So when you get a big glut like this, if demand slips even a tiny bit in the summer driving season, maybe more electric cars were sold, maybe more people are making more money, they decide to fly places instead of drive places, it is extremely difficult to get through those gluts. Having said that, we are rallying off the OPEC Secretary General's comments. Mohammed Barkindo said January data showed conformity from participating OPEC nations with output curbs having been above 90% of oil inventories, and they would decline further this year. He also said all countries involved remain resolute in the determination to achieve a higher level of conformity. So he's saying they're going to get from 90% to 100%. So it is words and hedge fund longs propping crude oil up, pushing crude oil higher. The rest of the data really pushes toward a more neutral to bearish stance. Market is not playing that out. If you've ever wondered why Mike and I trade price action instead of news, this is exactly why. The crude oil case is exactly why. So let me turn it over to Mike to show you what that price action is telling us.
Okay, great. Thank you very much, Bob. So we've had these levels on our chart for quite some time, many days / weeks. We're finally getting above the key 54.21 level. We've already hit essentially our first scan target, 55.07 from our horizontal channel levels. We also have the prior high of 55.24 to watch. Pulling back, if we can always retest this prior resistance being support and see how the market reacts there. So if we do, not necessarily today, but tomorrow or sometime this week, would not be surprised to retest somewhere around the 54.21 level. Let the rotation zone sort of start pushing it higher if we're going to continue higher. Next major levels we're watching for, 55.50, 55.93, 56.36, and 56.79. Let me switch over to a weekly real quick because you have to keep this in perspective. We also have a very large gap here back from, when was that? June 20, the week of June 29th of 15 to the week of July 6th of 15. We gapped down we closed on the 29th of June at 56.93, and we opened the following week at 54.90. So keep those levels in line. 56.93 would be a full gap fill, which is nearly the top of the channel. Let's go back to the daily real quick. If you look, 56.93, we have 56.79 is another key GAN level right before that. And then if you do fill that gap, our 100% channel level is 57.65. So those are levels you'll really want to pay attention to. Let me switch over to some of the futures relating to stocks. Here we have the Russell 2000. We got a little pullback to the rising rotation zone. This was another horizontal channel breakout. We've now passed the 50% level, which we've talked about before. Next major level we're watching is around the 1413 to 1415 key levels. We have a little GAN cluster in there. Next level higher is 1418, and then we have another GAN cluster at 1421.22 to about 1423.5. And finally, a full target of this should reach up there to around 1430, which is another GAN cluster. We have the Nasdaq, which keeps just running higher. It's actually pushed above its upper channel line. Next major target on the Nasdaq, 53.75. Watch for that. This is pushing up higher and higher, redrawn another breakout channel line, but that's very steep. It would be looking for sort of a midpoint between two of these, which comes in with this next key GAN level. The S&P, boy, we've already hit the next target pretty much that I had on this charts from over the weekend, which was 2362. We're trading 2361.25 now. If we're going to continue higher again, let me put in another level here. Next level we're going to look for is the 25% GAN extension. Let me just add that in, which would be 2373.25. That's your next key level higher. And notice the S&P is not, nor the Nasdaq, were horizontal channel breaks like the Russell 2000 was. Finally, the Dow is approaching our next. We have a GAN cluster right around, almost exactly on top of each other, about 2761. That's a very key level. Above that, we're looking at 2879 are your two levels higher for the Dow. And those are two different. It's a GAN box projection plus a GAN retracement projection that are lining up to make these levels. We're also breaking above a prior horizontal channel line on a weekly basis. There's sort of a wedge, the wedge channel line on a weekly basis. So we're pushing up there. So that could be some resistance, but you can see how all this is playing out on a weekly basis. And we do have a fair amount of targets if we do continue higher. We are getting a little extended from the 8 on the weekly. That does not mean a pullback is imminent, but it means be cautious and don't overextend your levels higher. Take your level. When that one's hit, go to the next level, but don't just shoot for the moon on these because we are getting a little extended. Talk to you later, everyone. I'm sending it back to you, Bob.
Thanks, Mike. The equity rally, if you want to know what's fundamentally behind it, again, not that it matters because we just talked about how crude oil fundamentals are mostly bearish, yet it's rallying. But just so you know, a lot of this spike, I mean, we're at record highs again. We had some good earnings. So that's fundamental and technical. We had Walmart beat EPS 130 versus 129. We had Home Depot come in 144 versus 134 estimated. We had Macy's come in at 202. That was estimated to be sub $2 in their EPS. But I think the biggest news is the Eurozone flash PMI. That flash PMI came in at 56.0 for February versus a forecast of 54.3. That is the highest since April 2011. Nothing could be better for U.S. equities right now than a renaissance in Europe. For them to completely be pulled out of their crisis recession that they were in. Subscribe and like these videos. Hit the subscribe button and hit the little like button in YouTube if you would. That'll keep us doing these. Also follow us on Twitter and like us on Facebook. And there's a new Money Path podcast out. Type in the Money Path podcast into your iTunes search bar, or just go to pathtradingpartners.com and download it from there. We really would love it if you'd subscribe to the podcast, though. That'll help us a lot. As well as shoot us an email at support@pathtradingpartners.com. Cheers, everyone. We'll talk to you guys later this afternoon.